Okay guys, let's do a short lesson about the relationship between the S&P 500 and the interest rate 10-year bond. And the question that I have for you is, what do you think the relationship when the market moves up? Now, should the 10-year bond interest rate move down or move up, actually move up with the market or move in the other direction? What are your thoughts about it? What do you think is supposed to be happening? And I'll show you this chart very soon. Okay, it looks like most of you think that the interest rate should move down as the market moves up, meaning in the other direction. Looks like, well, 85% of you think it should actually move down. Well, sorry to say, but most of you are wrong. It's exactly the opposite. What should happen is that the interest rate move exactly at the same direction as the market, and let's explain why. Let's first take a look at the chart. At the beginning of the year, you can see the S&P 500 moving down and then having a nice bounce upside. Now take a look at the TNX, that's the interest rate, that's a 10-year bond interest rate. It has moved down with the market at the beginning, but it is continuing to move down. And the market at the same time was really moving up. So the relationship between the market and the TNX should be the same. It is not right now. I can take you back 20, 30, 50 years and show you that it almost always was the same. So what happened right now? Well, first let's understand. When the market is moving up, the bond issuers want people to buy bonds. That means that they are raising the interest rate. If they won't raise the interest rate, people will invest their money in the stock market. So the interest rate goes up or should go up when the market is moving up. The funny thing right now is that the interest rate is moving down, so it looks like people are investing in bonds and investing in the market at the same time. That doesn't usually happen. So the big question is, who's right? The bond issuers who are lowering the interest rate or the market which is moving up? It is usually assumed that the bond issuers know better about the market conditions than the actual market buyers. And it is usually the truth. So the fact is, when the TNX is moving down, you should suspect that the market should move down. Now, I've been saying this to you guys in the room for the past few days, and watching the market in the last 3 days, that was a very big surprise for me to see the market moving up. However, I'm not always right, of course, so I, just assumed that I was wrong this time. But again, taking a look at the TNX and also taking a look at the Nasdaq 100, you will see that the Nasdaq 100 really is moving down too. So the question is, who's gonna follow who? And in this case, as I told you at the beginning of this week, I think the S&P should follow the TNX. So we are getting a pre-warning move of the TNX and watching the S&P possibly getting really close to first big market pullback. Now, I'm a trader, I'm a day trader, I'm trading every day as it comes, so if I'm wrong, nothing happens. I mean, I'm just watching the market goes where it goes. It's the same day that I'm trading and I'm taking the market direction anyway, so it doesn't really matter. However, if I'm getting prepared to market moves, big market moves, then I may be raising my quantities and so on. So you've seen me today raising my quantities. I'm up for the day. It's not a great day. I'm up like $900 right now, but that's a good day altogether. And again, same thing applies. I think that the market should move down from here. So I have one suggestion for you guys. Watch the TNX. Just put it on your charts. Give it a little bit space on your screens. TNX dollar is a sign. You should watch it. It is always very interesting to watch the relationship between the S&P and the market. Okay guys, if you have any questions, I'll answer them right now.